Hey, what is happening, Bulls and Bears? I hope everyone is doing well. Today is Tuesday. It is May 23rd, 2023. Back with another dose of economic reality. My name is JJ. You're watching Bull, Boom, Bear, Bust. Let's talk about the stock market first. Stocks were in the red today. Another day of fear of the debt ceiling not being increased. So let's think about this. So in order to have a rising stock market, we have to have an endless national credit card where we never have to pay off the debt. The debt just rises forever, and there's no end in sight to the debt. That's the only way the stock market can rise. That seems a little bit strange, doesn't it? But all indexes in the red today. Keep in mind, fake money is the only reason why we see the markets where they're at, including the housing market, the stock market, the prices of goods and products and assets. All these would come crashing down if we had real sound money backed by something tangible, such as this. Grab it here. Sorry, I thought I had I thought I had this within my reach. Silver coin backed by this. Isn't it beautiful? Isn't this just a beautiful thing? Shiny, real silver. That is real money, folks. And that's what's going to be re-implemented into the monetary system at some point. Yes, they're going to try to bring on another fake money, digital money system. It's not going to work because inflation is going to go crazy, I think. And ultimately, we're going back to that. So let's hear from our sponsor regarding just that. Real hard sound money, and then we'll come back on the other side for more news. There's no denying it. Gold is hot right now. Prices are soaring, and experts are predicting even more to come. Not so long ago, gold reached its all-time high of $2,069 per ounce, and now it's inching even closer to that number again. Bank of America, one of the largest banks in the world, is saying that gold will rise further still to over $2,200 an ounce later this year. So what, right? Well, gold is already a safety net for your hard-earned money, and now when the stock market is all over the place and the value of the dollar is uncertain, being safe counts like never before. Noble Gold is offering a free 5-ounce America the Beautiful coin for any qualified IRA or 401k rollover. Terms apply. A solid silver U.S. Mint issued coin celebrating our national parks, free with every qualifying precious metals 401k or IRA rollover. You can't go wrong with Noble Gold investments. Call 877-646-5347 or go to bullboomgold.com. That's bullboomgold.com. Link down in the description of this video. Now, on the note of what we just heard from our sponsor, I allocated some of my retirement account, some of my 401k into precious metals. I did a silver account. As far as stacking silver at your house or within your own reach, you have a big heavy safe, and if you stack enough of these in the safe is going to be so heavy it's going to be very difficult for anyone to come in and steal that. So that's to me, that's a very secure way and safe way, no pun intended, safe way in a safe way to stack metals and keep some money out of the system, because there's still the risk, in my opinion, of this whole banking system coming down. If the debt ceiling is not passed, we're going to see lots of surprising things jump up that I think a lot of people would have never expected. So much of what we see today just in the world is reliant on endless debt, right? So I still think the debt ceiling is going to be increased because, again, the powers that be, they don't want this thing coming down in their watch because they're going to get the blame for it. But always prepare for the worst, right? That's what I've always said here. I don't have a crystal ball. I don't say things are going to happen by certain dates. I give generalizations. I think things are going to continue to get worse, and I think the rest of this year we're going to see a lot of surprising things happen. But just be on your toes and be defensive, is what I'm saying here. Next, let's talk about Bud Light and the parent company Anheuser-Busch InBev. People are still protesting the picture of the person that appeared on the can. Pretty interesting that people have maybe lack of security in their masculinity to not consume a product based on the picture that shows up on it. I remember, and we'll talk about the stock price here in a minute. I remember at a point in my life, I was pretty lazy as a teenager. I would sit and play a lot of video games and eat these snack cakes, Little Debbie snack cakes. And it had a picture of a little girl in the box, Little Debbie. If Little Debbie was to come out one day on the box, the picture, and have a mustache, I still would have eaten the snack cakes because I loved the snack cakes. I think they were oatmeal cream pie, something like that. I was hooked on them. I gained a lot of weight that summer. But anyways, if you like the product and you're really going to stop consuming it because of the picture that shows up on it, so people are still protesting nonetheless. The stock price down to $58 for the parent company, Anheuser-Busch InBev, and it was actually just $66 back in March, so it hasn't really crashed. And that's because this brand, the parent company, owns about 630 different beers. So people that are protesting this beer and buying this other beer instead, there's a great chance that you're probably still buying it from the same company because they're such a large company, right? So a lot of these people, I think, are thinking that they're hurting the company. They're not. I mean, there is going to be some losses, though, because a lot of this particular brand, in this case Bud Light, a lot of the beer actually spoiled and went past the expiration date. So now the company's buying back the beer from a lot of these retailers, the beer that's been sitting there, sitting on the shelves. So it is hurting the company in a way, but it's not hurting the company, I think, in the way that many people had expected. We're not seeing a plunging stock price. In fact, it's only down about $8 per share, which is pretty significant when you look at, the percent change, over 10%. But, not the huge crash that I think a lot of people expected for that. Now, let's talk about Jamie Dimon again. He's out there with another dire warning. And this dire warning is, if the Fed funds rate gets to be 7%, we're going to see a banking crisis. He's been all over the map. He's been up and down, back and forth, inside out, right side out. He said we're going to see a mild recession. He said we're going to see, he said we saw storm clouds on the horizon. Whatever the case, he's going to be just fine because he is the head of a too big to fail bank. All the people that are scared now that the FDIC is not going to cover them at these smaller banks, a lot of them are running to the too big to fail banks like JP Morgan, like Chase, and he's the beneficiary of it. And people are out there saying, oh, he's so smart, he's such a great CEO, look at the profits of this bank. Anyone can be successful running a too big to fail bank, because no matter how stupid you are, and no matter how many bad decisions you make, no matter how many crooked things you do, you're going to have the guaranteed backstop by the printing press and the government. So I don't think he's a very smart guy. I don't really look up to people like that because, it's too big to fail bank. So how can you lose, right? Of course, we listen to what he says because he's a big voice out there. People do listen to him. So what he says could have an impact on what people think about the economy. So, of course, we talk about it. Let's talk about this. The White House has warned, without the debt ceiling being increased, stocks will plunge by 45%. Another example of how the stock market is dependent on the endless creation of debt and the fiat fake money system. Imagine where the stock market would be. Dow Jones, instead of, where did it close out today? Dow Jones closed out at 33,000, just over 33,000. Where would it be at if it weren't for the endless fake money, if we weren't taken off of the gold standard? Dow Jones maybe 300 instead of 33,000, maybe shave off 99%. Your guess is as good as mine. Please let me know what you think down below. I'm thinking 99% off of it because it's only the fake money that creates these bubbles to begin with. If it was based on real affordability or people buying things with money they actually worked for and saved instead of the debt monster, then who knows where these prices would be. Pretty crazy to even think about or even imagine a world where they couldn't create this endless amount of debt. Now, staying on top of hard money, real money, let's talk about, we have to keep coming back to this because this is so important. This is one of the basis of this channel here, and that's central banks. Central banks are buying gold. They're stacking, so to speak. 2022 is a record year for central banks buying precious metals, especially gold. And 2023 is going to be another record year. What does that tell you? That tells you that there's something, I think, happening in the near future where central banks are getting ready for it. I think they know the fake fiat money is going to fail and the whole digital dollar thing is going to fail. Markets Insider, recent article, de-dollarization. We know a lot of the nations that are going away from the dollar, trading outside of the dollar. Central banks will keep buying gold amid reserve shift. So there's a shift happening in the global reserve currency, and I think ultimately the dollar is not going to be the reserve currency. And but even with that, these banks are still buying gold. They're on pace for another record year. What does that tell you? That even the next money system, the next monetary system that's coming out, maybe not the very next one, but one that's headed out in the very near future, I think is going to be implementing precious metals. So another reason to stack, just like we talked about earlier in this video, keep stacking. That's my advice. People always say I don't have any practical advice or any investment advice. Keep stacking real assets. Be your own central bank. I'm not sure who coined that term. I've heard at least a few YouTubers talking about it. The first one I heard say be your own central bank, I think it was Gregory Mannarino. Actually, I used to watch a lot of his videos, not so much lately just because I've been busy. But be your own central bank. I can't think of a better way to put it. Get outside of the fake money system, have real assets. If you can buy some farmland in a Midwest state somewhere, some of the states are still pretty cheap. And ultimately, with the way things are going with the cost of food, I think farmland is going to be so valuable. And I think ultimately we're going to go back to a system or an economy of real trade and real assets back and forth. So for example, you trade your neighbor, you give him some silver, your neighbor grows a bunch of food, and you get some food from the neighbor. You are good at fixing vehicles. You go fix your neighbor's vehicle. He's good at doing roofs. He'll put a new roof on your home. That type of trading, I think ultimately that's what we're going to go to. And I think it's going to be a Great Depression type of situation where we're going to see that type of trade amongst one another re-implemented. And I think it's going to be that bad. Some people are calling it Great Depression 2.0. That's not my term. Peter Schiff's out there saying that. So many economists are out there saying that. I even heard Jim Rogers at one point saying buy a tractor because growing food is going to be the next, the next gold as far as what's going to happen. So that tells you, I think, a lot of people are seeing on the horizon food shortages and Great Depression 2.0. Right, let's wrap it up here with a little bit of good news. The good news is oil. Oil hasn't spiked like many people thought it would. We're at about just under $74. And keep this in mind, in the summer of 2021, we were about at $74. So there's some good news. Out here in California, not so good news because it's still about $4.60 and $4.70 even for the lowest grade gasoline. So we're still paying big at the pump, but it could be worse. A lot of people had predicted $100 plus oil by now. Could it be because demand? Could it be because demand is dropping off of a cliff because so many people are maxing out their credit cards, living paycheck to paycheck? Are people not traveling like they were? So if we see prices stay below $75 throughout the summer, that's going to be another, I think, big warning sign for the economy. Please let me know what you think about that down in comments. Is that good news, or is that just another troubling sign that U.S. consumers are in big trouble? Please let me know. Thanks, everybody, for being here. Appreciate your support. Please hit that like button if you'd like to keep this channel alive, and we'll see you down in comments on this one. Keep stacking. Big love. Bye for now. Peace.